Mike, can you walk us through this chart and kind of talk about how this type of a project could be not an ideal one for investors considering to do a real estate investment because of COVID and some of the other impacts that have happened that may have more negative impacts on certain types of projects versus others.
Well, these numbers look very familiar because I have looked at projects that were put into the system in 2019, and these assumptions would have been reasonable assumptions where you had your estimated cost of 60 million, your revenue, and your expenses, cash flow, all based on 2019 assumptions. Then you go fast forward 4 years, and yes, in fact, the reality is that those development costs have gone up by a marginal amount, 1 on 6, whatever that is, 15% or whatever that number is. Seems realistic. Your revenue definitely has been muted. Top line revenue has been muted by COVID, by a contraction in economic activity. So very realistic to have seen a 10% drop in top line revenue. You would have been lucky if your operating expenses had stayed flat, but let's say if they did, even though your revenue went down, maybe your operating expenses stayed flat, but they probably didn't. So then your free cash flow before debt service has gone down by 20%, while your interest rate expense has gone up by 40%. Very realistic. I mean, in early 2022, you could borrow at 3%, and that loan today is maybe 6%. So in many instances, debt service has doubled in 4 years, with net income, of course, being suppressed by these relative amounts. But yeah, you could see, as you say here, going from a $70 million valuation to a $25 million valuation due to these lower top line revenue, higher interest expense, and an overall capitalization rate being higher now due to the higher cost of money. So it's very realistic what you have here.
So if you're a potential real estate EB5 investor and you've got the option of going into a project like this where it's likely a large single structure project, hotel, apartment building, that was started in 2019 and is now about to finish, compared with a large single family home project where there's a lot more flexibility to build and sell homes and adjust cost expenditures, increase prices, et cetera. How would you kind of evaluate that one kind of project type versus the other, and why would you go with one or the other?
Well, as I said, the single families, you don't have to build it all at once. Generally, you could phase it. You may take down the land or have an option on extra land, but traditionally you got a phase 1, you sell out a few hundred homes, and then you have to put in the infrastructure, sewers and roads and all for phase 2. But you've recouped a lot of your investment maybe through the sale of phase 1. You've also tested the market and penetrated the market with 25% of your project in the phase 1. So all your capital is not deployed early in the process, so that reduces your risk.
Got it. So all things equal, if the goal is just reduce investment risk, reduce risk of loss of capital, you definitely prefer to be in a more flexible, ongoing single family project versus a larger sole structure project.
I would. The only variable is the takeout financing to each individual home buyer. If interest rates are elevated, clearly that 30-year mortgage that homeowner is buying with is going to be higher, which could depress the sales price of those homes. But the saving grace is you haven't built all the homes at once. You haven't had to deploy all your capital at once. So you might, delay delivery of the second phase a little bit till interest rates cool off.
Got it. Got it. So we talked a little bit earlier, about, some of the impacts that have occurred, over the last 3 or 4 years on the real estate market. Dave, do you want to kind of, walk us through some of these major changes that have happened, in markets around the U.S. and how they've impacted projects that are, that have been under development, let's say, for the last 4 or 5 years and are now, coming to the market this year and next year?
Yes, well, this somewhat gets back to my point earlier, which is there are some things that really are beyond your control, and then there's some that are at least partially under your control. COVID, for example, was something that no one foresaw and really couldn't be controlled. And if you could get lucky, and in some markets, COVID didn't affect you as much as in other markets, and no one really could predict that. So you just don't really worry about those things. Some people call them black swan events, some things that are just so beyond any kind of reasonable forecasting that you just would never know. And so we won't worry about it. What are the things that you can control? And that is basically location and cost.